right, so maybe you have $1,000 on which you are looking to start trading futures with. All right, there's a bunch of different markets or asset classes that you can trade. You know, the indices, commodities, currencies. You have to pick your own choice of market you want to trade. But let's say you have $1,000 to start trading the futures. What should you actually do? I talk about trading the micro futures to all traders or beginner traders that are starting off. This is once you have gained the experience and understanding and learning how to trade. In specific, understanding the structure of the market, understanding the movement of the market and which direction. You've got to identify, is the market pushing, making higher highs and higher lows, or making lower lows and lower highs, breaking through areas of structure, because that's going to tell you which way you actually need to trade. Once you figured out how to properly understand and learn market structure, I've covered a great video on market structure, especially if you are an elite member. There's a great video for all the private community members, and if you're interested in joining that community, it's only $6.99 a month. Okay, very inexpensive fee, but you also get the trade breakdowns where I go into detail about trade setups, as well as my video playlist. So, basically you can grasp an understanding educationally how I trade and surrounding the strategy of supply and demand, and be on your, pretty much be on your way to trading yourself all around supply and demand of areas of aggressive buying and selling. And anyone who is interested in joining and becoming an elite member, the link is down in the description portion of this video, right below the Discord link. Yes, there is a Discord just as well. And below that, there's a link that says become an elite member. Click on it. There's going to be 2 tiers that pop up for $6.99 for anyone that's interested, again, in gaining access to the trade breakdowns, the market structure video, to where I go into detail about, what to really look for when it comes to structure of the market, so you understand which way you should be trading. Again, that's down in the link is down in the description portion of the video. But today we're going to talk about if you have $1,000. Okay, if you saved up that amount of money, again, I would start off trading the micros. No more than 2 contracts, to be really honest with you, because you don't want to leverage too much in the market with such a small size account. But I'm here to show you how you can grow that account to $2,000 within a week's time. So that's basically a 100% return on your investment or your money you put into your account of $1,000. You do that week to week. You can watch that $1,000 by the end of a month. Say, for example, turn to $5,000, so you've gained $4,000. All right, so what is that? That's a pretty significant. That's 400% increase. Okay, as far as what you can earn by the end of the month. And if you do that consistently month to month, you'll watch your account size grow. So I'm going to show you how to do that trading the micros. Now, this is an E-mini future. It is an E-mini futures chart of the Nasdaq, and I'm just using this specific chart, okay, because the micros and the E-minis kind of move the same. So don't worry about it being, oh, this is the E-mini while he's showing me this on the Nasdaq 100 futures E-mini side. The micro E-minis, just focus it. The strategy is just the same, okay? Because all it is using chart confluence, being able to look at and mark charts up, or your charts up off of a higher base or higher time frame first, and then moving down to a lower base chart to look for entries. This is called scaling down and looking, having a higher base or higher time frame approach, and then moving down to a lower base chart or lower time frame to get into a more precise entry point. I'm going to show you an example here. This is a demand setup. I've talked about this type of setup tons and tons of times again, okay? So let's take a look here. First and foremost, we've got to figure out the direction of the market, all right? Is the market breaking structure higher, or is it moving lower? All right. So we see right here where we have a low resting right here. The market pulls back and it tests that low, as you can see right here. And then it starts moving higher, as you can see, and starts to break structure. So it's breaking structure, making higher highs and higher lows as it moves higher, correct? So this is that low right here. And, this could be for anyone that's really looking to trade part-time, still work their job and be able to find opportunities in the market to make an extra, $200 per day is really all it's going to take for you to get to that $1,000 mark, from going from $1,000 to $2,000. So the market is breaking structure, as you can see here, as it moves higher. It's moving, making higher highs and higher lows. For all those that have a hard time seeing it, I just draw it out. As you can see here, let's just say this is a run to the upside, pulling back, making a new high, pulling back, breaking structure, pulling back, breaking structure, pulling back, breaking structure to the upside here, pulling back, breaking structure, got a new high here. So you can see what it's doing, and then it pulls back, say for example right here, and it just continues, continues moving higher. All right. And when it gets to this point right here, you see where it moves lower here and pulls back, makes a lower high and then a lower low. It breaks a bit of structure right here. But the market then turns back around and starts making higher highs and higher lows and taking out structure back to the upside. This is a high right here. This is a major high, but this is more of what is classified as a minor structural high right here. It does break that to the upside. So we're still breaking structure, moving higher, even though we haven't broken this major high yet. So when we see things like that and the market pulls back, this is a demand zone. You can see the aggressive force or buy into the upside here on a pullback and then breaking this area of structure right here above 18,029. So that's a structure break to the upside. The market then pulls back. This is a higher base chart, but again, like I said, think of this as if we were trading the micros, because these same setups you're going to see regardless of the chart, time frame, or regardless of the market itself. Just pay attention to structure. Pay attention to look for, are we making higher highs and higher low breaking structure, or making lower lows and lower highs breaking structure? Looking for, if we're moving higher, demand setups. If we're moving lower, supply setups. The market broke structure to the upside in this case and pulls back to this area of demand right here. Aggressive buying. So I would be interested at this point to go long. Not now off the higher base chart unless you like to swing trade or position trade. I'm not saying if you got the capital to be able to do that and you do that, you know what you're doing, then that's fine, because then all you'll be doing is waiting for the break and close of a candle. But you got to understand, taking trades from a higher base chart, there could be lots of drawdowns you could encounter, as well as if you don't have the right size account, you can blow your account real quick, and then you have to start from scratch or start from zero all over again. All right. But this is, again, it's for someone that has a small $1,000 size account and is looking to grow that account on the daily basis, say $200 or more. Now, what I would focus in on, especially with the Nasdaq, is for 20-point moves, each time. Is that realistic? Yes, it's pretty easy to get if you know what you're doing and you're taking the right setups, because 20 points is actually 80 ticks. Okay, it's an 80 tick move because there's 4 ticks in every point on the Nasdaq. So 20 points times 4 ticks in a point, that's going to be 80 ticks. Okay, so depending on the number of contracts that you actually trade, then that's going to get you to, I'm going to show you here an example of what we need to do. So the market pulls back to this zone here on the higher base chart. So I got this zone marked off. All I want to do then is just move down to a lower base chart, and I'm going to use my 24 range chart. Start off using my 120. Now I'm moving down to my lower base chart. This big box we see right here, that rectangle, that is the higher base zone there. Now there's 2 ways you can pretty much go about doing this, especially if there is a zone within inside the zone, meaning on the lower base chart now, if there is a nice markup or setup where there's a demand setup within the higher base zone from the 120 range chart. So basically a demand zone on the lower base chart within the higher base chart, okay, zone. Right, let's see, we're looking for the first tap to identify to see what we have. The market retraces back. We got the first tap here where it comes back in this area right here. Now look over here to the left-hand side of the chart. I know it's hard to see. I really can't blow this up much because we're using a 24 range chart, but there is a small little gap resting right here around 17,904. And there's a gap there that makes it high probability. That means the zone hasn't been tested, so it's an unmitigated zone. If there is a zone within the zone, I will draw it out for you right quick though, so you can kind of, let me get the rectangle box right quick, so you can visualize it right here. This is the zone within the zone. Okay, so on the 24 range chart, we got a zone that's inside of our 120 range chart zone. So at this point, when I see that we have a demand zone resting on the inside of the higher base zone, all I'm doing then is just looking for the break and close of the candle. But in this situation right here, because I have 2 significant means of confluence, okay? In this case here, as it is, that makes it even more high probability. When I got a higher base zone that's not being tested, there's a gap there, and then I got a lower base zone within the higher base zone, I'm getting aggressive. So basically what I'm gonna do is the moment it taps there and I start to see the market move away from that area, I'm probably gonna get in around about 901, 902, and I'm gonna take it up and try to grab my 20 points. And here in this case here, it goes up to about 22. So I would be safe to get my my 20 points on this move right here. Even if you picked up 10 points, it's still good. But for all those that want to wait for the break and the close of the candle and get in around about 905 and then take it up and try to take it going long, you're probably going to pick up maybe around between 15 points, somewhere around there, and that's fine because the market also then gives you another opportunity for a setup. Now, where are you going to place your stop at? The stop goes in the back end of the rejection from when you get into the trade. So when we tap into those zones and we look to get in either aggressive or get in at the break of the candle, it's going to go back here at 17,897. Give yourself a few ticks room, a few points room, because the market loves to come back and test. Like it pushed up and pull back. Anytime it moves up, it's going to pull back. Anytime it moves down, it's going to pull back. The market pushes and pulls that way. So it goes up there, say for example, and you have to be mindful what's above you when it comes to actual price action. This right here was a structural break to the downside. As you can see here, it broke structure to the downside when it came down here. So you have to be careful when these little swing areas above you to where the market can stall at. If you see the market gets to an area where there was a break of structure above you, coming to the downside, be careful and look for price action accordingly, what's taking place above you just as well. So when the market gets to a key area to where it could possibly bounce at, then look to see how it's reacting. Is it throwing wicks at that area, meaning multiple wicks? Then that's probably a sign they probably want to pull back some or push lower. All right, so if you carried it through and was able to weather the storm, then you picked up your 15 to 20 points right there if you got in aggressively for sure. Now, let's take a look here because it did give you another opportunity. So after it did what it did, it came back down, okay? And this is where I talk about, all right, let's say, for example, we didn't have that zone, that smaller base zone within the higher base 120 range demand zone, okay? What I'll then do is I'll look for the market to tap the higher base zone and then show me where it wants to break structure higher and come back to a newly formed demand zone, okay? So let's take away that if we didn't have where a lower base zone within that higher base zone, okay? All right. Let's say, okay, so then it comes down here. It does give you another beautiful setup, and this time it runs to the upside. I'm going to show you. Comes down, break structure. Off the lower base chart, push down, pull back, broke structure here. Now, let's say it comes up here and it breaks 17,922, which it did. Pushed up, made a high, lower high, okay? Sign that they may want to push higher, right? Boom, break structure to the upside. It broke this high here at 17,922. There's a demand area resting right there that's untapped, it's unmitigated, meaning that hasn't been tested yet. We're going to mark it off and see what happens when it gets there, okay? Now, you may be asking, well, what about this zone down here? This is a low probability zone. It's already been tested, okay? Pushed up, pull back, boom, taps right into this unmitigated gap at the zone right there. And then what does it do? What does it do? We get the break and close of the candle above. Let's say you got in here at 23, at 923. Then hold it and try to get your 20-point move to the upside. In this case here, you can see what it did. This is why I tell you, look here. You put your stop right here to back in at 911 for all those that are asking. What did it do? They came back to try to scare you out of the trade because it came back right there to almost 17,911. So give yourself a few ticks, a few points room right here. Then what does it do? Let me show you. It moves big time to the upside right here. See that? So again, what I'm trying to say is that if there is not a smaller base zone within the higher base zone, meaning on the 24 range chart, which is the lower base zone I'm looking to take my trades from, if there's not a demand zone within the higher base 120 range zone, then I'm going to wait patiently for a structure break to the upside. I'm still moving with the flow of the higher base chart. It tapped into the higher base zone on 120. Then I'm going to look for a structure break to the upside and then for a demand setup, okay, or an area of demand for it to pull back to, and then take my trade going long. Simple as that. This is how you can, turn or flip or grow, I should say, $1,000 into $2,000 by the end of the week. So let's look at, say, for example here, It's going to pull a calculator up. Now, if we get into 20-point moves, say for example, and it's pretty easy to pick up 20 points on Nasdaq, times 4, I'm just here to show you, that's 80 ticks right there. Now, the micro Nasdaq 100, it has a tick value of 50 cents a tick, okay? So, times 50 cents, that's 40 bucks on those 20 points, right? But that's one contract. So we double that with 2 contracts, like as I said in the beginning of the video, then that's going to give us our 80. That's going to give us 80 bucks. Now, we do that times 2 trades, that's going to give us 160. So we may need to take 3 trades. We may need to only take 2 trades, because let's say, for example, you get into where you get in and able to pick up more than 20 points. And let's just average it out at 25 points. 25 points times 4, that's 100 ticks right there, right? Times 0.5, that's a tick value, and then times 2 contracts on that first trade. That's 100 bucks. We do that 2 times, that's going to give us our 200 bucks a day. So we're talking about an average in about 25 points, which is going to be 100 ticks. That's not hard to do in the Nasdaq, because it has a lot, it moves a lot. It's a very liquid market. So you just take basically 2 trades a day, trading 2 contracts to get that $200. I mean, and you can build your account up. I mean, if you had $1,000 and you was able to even grow it to $500 by getting $100 per day, all right, on a week, then at the end of each week, that's $500 a week. That's $2,000 extra a month, and you started off with $1,000. So I'm telling you, that's how you can slowly build up an account size of just $1,000 and watch it grow from a part-time standpoint. If you want to, part-time trade for a living, okay? All right. I mean, you're keeping your full-time job, but you want to also, make some extra income and invest it in yourself, put it into your personal trading account, and doing that on a daily basis. Okay. So it's not hard to do. I'm just here to show you that, but you just got to be logical in speaking and looking for the right setups and be patient. That's what people have the hardest time. I see a lot of people, even on the Discord, they are very impatient. They want to take everything that looks like a supply setup or everything that looks like a demand setup. They're not waiting patiently for a true breaker structure, and then they get themselves caught up in trades, and then it's like they're just spinning wheels. That's all they're doing. They're not waiting patient. Patience is everything when it comes to this business of actually trading. But first and foremost, you've got to understand the direction of the market before you start trading. All right. So I'm just here to talk about that today. That's all I want to share with you. Anyone and everyone that's interested in joining the elite membership, I'm telling you, the trade breakdowns really, really help people, because it helps you identify setup after setup, what I'm thinking, what I'm looking at, going in detail about the trade setups, where to place your profit targets at, where to place your stop losses at. Just giving you a full-on rundown of what I was thinking about these trades, what I was thinking when I was taking these trade setups. There's no better way to explain things than to really break them down into actual, the setups themselves. So these are trades that I've taken and posted over the Discord community, and then I bring them to the private community and break them down so that you guys have an understanding. I mean, for $6.99 a month, where else are you going to get that kind of information from, unless you spend loads of, some significant amount of money for someone to show you something, and then it may not work out. But anyways, I'm not here to force anyone's hand. That link to become an elite member is down in the description portion of the video for anyone that's interested. And that's all I have to share with you guys today. If you're not a current subscriber, please take the time to go ahead and click on the sub button down below. Become a member. Subscribe to the channel today. Make sure to turn your post notifications so you don't miss one of the uploads here on the channel. And last but not least, if you found value in today's video, please make sure to click on that thumbs up button and drop a like on the channel. Thank you. Or drop a like on the video, I should say. All right.